good brunch wherever you may be in this world. I'm Crypto Smooths with DJ and DeFi Capital, and I'm here just to go over some crypto basics, and so you can understand what an actual blockchain is, why certain coins are more prevalent than others, especially in price. And we'll get into some real crypto talk here, so you newer investors in crypto can understand you're not just going to 1,000 times your money in a day. It won't happen unless you get really lucky. So, what the heck even is a blockchain, right? So in 2008, Satoshi Nakamoto and I believe two other people, they created a piece of code. And what this code did is record transactions and document them through a blockchain. And they call it a blockchain because it's blocks that are stacked on top of each other. So a transaction gets validated, it goes into a block, and there's a certain amount of transactions per block, and it gets validated through people who are using mining equipment or a way for cryptographers to get through and decipher, okay, this transfer happened between this address and this address, which is how you are able to send any kind of cryptocurrency like Bitcoin, Ethereum, XMR, but we won't even go through all that. So here is the history of Bitcoin, right, since its inception. So it was mainly created by this man named Satoshi Nakamoto. He's not a real person. I personally believe he was an asset to some government, as this is very much a government code. If you're familiar with the virus Stuxnet, you'll understand what I mean by that. But that's besides the point. It doesn't matter because we have the technology now. Essentially, what a blockchain is our new internet. And now there's very few people in the world, you could probably count them on one hand, that can create a new blockchain. Like for instance, when Bitcoin had internal problems with their staffing, they did a hard fork. And a hard fork just means they use the same code and put their own little oomph on it, and that's where BCH came out of. And as you see, it's $112 compared to Bitcoin's $18,876 at the moment. This beautiful chart of Bitcoin's history, and this was created a while ago. I pulled it off the internet, so shout out to Charts Bitcoin. Anyway, so here's the inception of Bitcoin. And when they actually created Bitcoin, what they did was just send it out on the internet pretty much to nerds. And I know I myself, I was a young coder when I found it, and I found it right about here, right around here, somewhere in this area. And as a young coder, when I actually looked at the code of Bitcoin, I was in awe because it could replace an entire accounting department. And now here we are in a multi-trillion-dollar a day industry, right? And we've literally created sectors in the news headlines. They'll call it a cryptocurrency sector of NFTs, etc. But anyway, so the most important years are the halvenings. What's a halvening? It limits how much you can get. So on the first halvening was 11/28 in 2012, and so it limits the supply, so it controls inflation, because there's only a certain amount of Bitcoin that can be mined ever. It's not like gold. It's not like these other assets that you could build more real estate, etc. Bitcoin has a set amount, and that's it. And that's why there's many people that believe it is the best fight versus inflation, because it's literally inflation proof. In every halvening, it limits the supply of what new Bitcoins are out there, and how much these miners that are validating your transactions in order for them to happen, how much they earn. So, with that being said, Bitcoin is the shit and won't go nowhere, much like real estate. Alright, so let's return to some basic blockchain facts, what they do, and how they operate, okay? So, here it is, a fact-checked article on Investopedia. What is a blockchain, right? A blockchain is a distributed database or ledger that is shared among nodes of a computer network. A node is simply something that someone runs and can be hooked up to or read by other computers, thus making it a computer network. As a database, a blockchain stores information electronically in digital format. Blockchains are best known for their crucial role in cryptocurrencies such as Bitcoin, for maintaining a secure and decentralized record of transactions. That, my friend, is the innovation itself. Everything in the world, any kind of money transaction, any kind of transaction, bought an NFT, it's out there publicly for everyone to see. And you can't hide. You literally can't hide. If you are intelligent enough to go through these blockchain explorers, you can see exactly what everybody is doing. Now, financial literacy in America just simply is not taught to us, okay? So, I understand skepticism behind Bitcoin, blockchain, etc. However, it serves the global agenda of the people who are actually running this world to have one currency. You know, cue in some Smeagol. But here's the real pros of a blockchain. It has improved accuracy by removing any human involvement in its verification. It's cost reduction by limiting any third-party verification. Decentralization makes it harder to tamper with, makes it harder to hack. Transactions are secure, private, and efficient. Transparent technology provides a banking alternative and a way to secure personal information for citizens of countries with unstable or underdeveloped governments. So, for example, the Zimbabwe hyperinflation. Guess what you could do there now? Buy Bitcoin! And the price is accepted worldwide. So you don't have to have a stack of cash like this to go buy bread when it looks like it's $50,000. Just to go buy a loaf of bread. Hyperinflation, gone. It's also some disadvantages, but they're very minute in compared to the pros. So some of the cons would be a significant technology cost associated with mining Bitcoin. As of right now, at 9/6/2022, we have mined most of Bitcoin, but there is a date that the last mining will happen on Bitcoin. Low transactions per second, that's no longer really a thing. As we have XDZ, XLM, all these other different cryptocurrencies that solve that problem. History of use of illicit activities on the darknet. That'll never change. We cannot change the demand for drugs or people wanting to do fraud or any of those illicit activities. It won't change, it can't change, and to me that's a non-factor. Regulation varies by jurisdiction and remains uncertain. That's a definite thing that needs to be addressed, because central banks, the only way they're allowed to really maneuver in the cryptocurrency space is by investing in labs and these other projects on the back end. They cannot directly buy assets, although I don't know about that. And data storage limitations. Not so many cons versus the pros when you really weigh them out. Let's go through some real world use cases that the blockchain can provide, right? Voting. It's already been implemented through DAOs, decentralized something, but it's a DAO. That's what it's called. So we could implement our presidential voting through DAOs, and there's no way that there can not be accuracy within that unless it's manipulated by the people who are running the DAO. Okay? Supply chains. In the IBM Food Trust, suppliers can use blockchains to record the origins of materials they purchase, so it can be organic, local, or fair trade. So then you know exactly where your food's coming from, which is something that's actually really important now as food has become a large issue. Smart contracts, potentially the biggest innovation since the blockchain. Smart contract is a computer code that can be built into the blockchain to facilitate, verify, or negotiate a contract agreement. Basically, it's a digital contract. And so you have to sign the digital contract. Maybe you have to pay a little bit on the digital contract. But irregardless, contract is a contract, right? So whatever is in that contract, that is what you are signing or trying to implement, etc. So for example, and this has happened, people have bought houses with Ethereum through smart contracts. Real estate agents are already using smart contracts to be ahead of the curve. Let's see, some other real life. Property records. You will never lose it. Why? Because blockchains store every little minute piece of record. And so your property records could never be lost. And whereas you go to your city hall, they don't have stuff prior 15 years. I mean, that's just the way it is here. Could be different for you, but that's one thing. Healthcare providers. Now, imagine a surgeon has to do a very difficult surgery that has never been done or has a low rate of success. This man can now put on some goggles, put your exact body on a fake operating table on the metaverse, and do the operation and have it go to the conditions where it tells you, oh, you just killed the patient, or this is happening, Y is happening, X is happening. And so it does that for surgeons. The medical records, I just went over basically how it can keep you can't change any record. You can't do anything to those records once the blockchain has accepted it and verified it. Let's see. So obviously the currency, Bitcoin, banking and finance. I don't know about you, but I don't drive down to the bank to go check my balance. I don't even go to the bank to put in a check unless it's a large check. Why? Because you could do it right on your phone, correct? So we are already doing everything digitally. Why wouldn't we do it with some kind of technology that gives us a benefit? Just my opinion, because you can yield farm and earn 500% on your money, whereas your bank, as soon as you give them your money, it's a liability to them. They loan it out instantly and earn at least 17% on it. That's just one thing. But blockchain, and each blockchain, so the Matic blockchain, AVAX, Avalanche blockchain, Tezos XTZ blockchain, I see them all as different internets, as they can talk to each other, which Polkadot has already has the scalability and capability to allow blockchains to speak with one another, because that's was a huge real life problem. And now we have that problem solved. So even when we have all these different metaverses, which you can picture as a game, each metaverse is a game. And now with through DOT and other means, there's other coins as well. They can talk to each other, much like how Xbox and PlayStation never spoke. Epic made them speak. And now Epic is also involved in developing out play to earn gaming, aka blockchain gaming. And I know a person, this is just one example. I know a person who runs a car garage on the metaverse. He upgrades your car or fixes your car. He earns about $300 per day. So with all of this opportunity, with all of this technology being new, we are still in the midst trying to figure out where it fits, where it doesn't fit, and how we can use this technology. Because if you go into traditional finance, like I did, and you learn the banking system of America, you learn how traditional finance is and utilized, I think you'd be disgusted. And disgusted as I am, the Federal Reserve isn't even a part of the federal government. How they fight inflation is they print more money. That's what they do to fight inflation. Whereas what Bitcoin does to fight inflation, it has halving events. And the last halving event doesn't happen until 2140. So your grandchildren can be invested in Bitcoin still. And I won't go further into what I think and why this is going to be 100% success, because when you research something and you think about something, some people like to call you a conspiracy theorist. And so that way I'm not going to go into my personal opinions, and I'm going to leave it with facts. So with these facts, think what you want about the blockchain, and then make smart money moves, right? Invest intelligently. What's going to be here in 50 years? That's how you have to think. What's going to be here in 20 years? What's going to be better in 5 years? What's going to be the best in 10 years? What's going to, that's, you don't invest with the goal of getting rich in 1 week, because that don't happen. That very rarely happens. The only time that happened is when apes took over the stock market and hedge funds lost their mind. That is the only event. Otherwise, you're getting lucky, pretty much. But getting lucky, you've obviously done your research, because in order to get lucky, you have to have had worked hard. My opinion. Anyway. I'm Crypto Smooth with DGen DeFi Capital. There are some blockchain basics there. If you'd like me to do another one and get more in depth with blockchains, please just like and subscribe and say you want some more. All right, guys. Have a good one.